So everybody, welcome to this webinar about what should an actuary know about artificial intelligence. This webinar is hosted by the Professionalism Committee of the Actuarial Association of Europe. This is our parent committee, and it has given its responsibility to the working group on artificial intelligence and data science. And I am happy to chair this working group. We have 287 registered participants to this webinar, which shows the great interest on current developments on AI and the AI Act. The AAE has published a fairly extensive paper on what should an actuary know about AI. And to some extent, this webinar is based on this paper. Also, we hope that the webinar incentivizes people to read the paper, which I still think is worth reading while AI is developing fast and things easily become outdated. Before getting going, some housekeeping. You will all be muted throughout the webinar. There will be time for questions and answers towards the end of the webinar. That is, there will not be no questions and answers between the presentations, just at the end of the webinar. You can send your questions throughout the webinar through the Q&A button at the bottom of your screens. And you can also vote, you can give support to questions there if you think one or the other questions should deserve a special attention. Also, please note that the chat will be disabled. So intelligence comes from the Latin word, and it means reading between the lines. I think we are now ready to do that and start with the first presentation on implications of the AI Act on actuarial work and the insurance industry by Bogdan Tautan and Jonas Hirz. So Bogdan works as a senior reinsurance actuary in the Netherlands, and he's the vice chair of the AAE's Actuarial Intelligence and Data Science Working Group, and he's also committed to the work of the AI task force of the International Actuarial Association as the chair of the governance work stream. And Jonas is a principal at Boston Consulting Group and a member of its global finance and risk team. He leads the working group data science within the Austrian Actuarial Association, and he is also an active and productive member of the AAE's Actuarial Intelligence and Data Science Working Group. So please, Bogdan and Jonas, the floor is yours now.
Thank you very much, Esko. Good morning, good afternoon, and good evening, everyone. I understood there are many participants from overseas. So thank you for joining and participating to this webinar. So Jonas and myself will walk you through the implications of the AI Act and the actuarial work in the insurance industry. Firstly, we will provide an introduction, and then we will give some key information on the AI Act itself, as well as on how to approach the AI Act and what it means for actuaries. So before starting, as the upcoming 2 hours will talk a lot about AI, I think it's relevant to refresh a bit the terminology. So as of the early 50s, Alan Turing and John McCarthy introduced the concept of artificial intelligence as something that was mimicking actions of humans and the intelligence in forms of computer machines, and those were proposed already back then. However, through the past a bit more than half a century, a lot of evolution have been seen in the space of AI. Even in the early 60s, when the classic AI was introduced, concepts of machine learning techniques were already explained, with later on methods of supervised and unsupervised learning to form a crucial part of our actuarial work, especially in the area of risk assessment and predictive analytics. And once everything evolved, the methods of the so-called deep learning, which involved complex neural network, became more and more useful for our society in terms of chatbots or natural language processing tasks. And not to mention the last one, which produced quite a hype in around the world, was the rise of the generative AI, which, as a transformer-based deep neural networks algorithms, were quite applicable in the area of video, image, text, or speech recognitions. And that's something that we as a society perceived it as quite challenging, but also helpful in different tasks that humans do these days. You can imagine that the computer power somewhere in 50s was, I think the cost per megabyte was somewhere around $400,000 back then for a memory, while now it's not even 10 cents per megabyte. So given all the technological developments, the generative AI found its place in our society very easily. Before getting into the AI Act, maybe it's also good to look at how the global landscape shaped in the past decade or so. And firstly, with the rise of the generative AI, a lot of risks were already obvious. Those of discrimination, indirect discrimination, risks of hallucination, for example, especially when prompt insertion became more and more relevant, as well as security risks. And based on all these risks, regulators and institutions, and especially also the tech world around the globe, started being concerned and developing different principles. For example, fairness, accountability, or human oversight, just to name a few. And as of 2018, Singapore introduced also the so-called FIT principles, which were very well perceived back then, and China started working on its regulation as well. However, the first set of principles in Europe were introduced in 2019 by the high-level expert group of the European Commission, introducing ethics for trustworthy AI. And as of then, also OECD took action to basically introduce a set of principles and create uniformity around the globe. Especially now in the 2024, when the AI Act was finally agreed on, OECD also actually partnered up with the Global Partnership on AI, which is an initiative of 29 members, including US and EU, with the scope of creating, again, uniformity, speaking the same language and having the same understanding on how to mitigate the risks that are posed by AI. Without too much detail on the global landscape, I would like to give you some introduction on the AI Act. So while it was finally agreed on 13th of March in 2024, earlier this year, the AI Act is actually the first regulation that aims at safeguarding human oversight and that introduces a fundamental right assessment process. It's also a risk-based framework, classifying AI systems in different risk categories depending on the requirements and the risks they are posing, of course. For example, the systems that are banned within the Union fall under the category of prohibited AI, and those relate to systems that do social scoring, deal with emotion or behavior recognition, biometric categorization, or are unfavorable towards natural persons. Another category very relevant for us, the insurance industry, is the general purpose AI category, which is actually referring to generative AI models or foundation models, large language models as we know them, that pose a significant risk, including a systemic risk, that have self-supervision and are trained on a large amount of data. High-risk AI systems category, also again very relevant, specifically for us actuary, is the one that includes actually the most requirements, and it relates to health and safety of natural persons. If they are threatened, then those should be already considered as high-risk systems. And also important to note is that life and health insurance pricing is by default categorized under this category within the Act. The high-risk AI systems, in terms of the applicability and of the timelines when one needs to comply with this regulation, is that is as of the 1st or 2nd of August, since the AI Act was in force, companies and businesses and AI system operators need to comply within the 24 months under certain set of rules as defined by Annex 3. What is also important to know is actually that the European AI Office will be the center of AI expertise across the Union, and it will be formed by an AI board, formed by member states representatives, a scientific panel, and an advisory forum. And of course, the AI Act comes also with its penalties, as highlighted here, for non-compliance, violation, or misleading information. So the AI Act, beside its risk classification, also introduces different requirements for different operators. There are 4 operators. Firstly, the provider, which is actually the developer or the creator of the system, which needs to comply and ensure with the AI Act, of course, and ensure the right operation of the system. There are, under the high risk classification, there are 8 requirements. For example, I will not name all here. You can see them. But for example, under the compliance, the provider needs to provide the right logging of the system, ensure that the system is fully complying with the requirements as intended for its purpose. On the data governance side, for example, it needs to include training, validation, testing data sets, and meet the quality criteria for the system that is in place. So you can imagine that all these requirements bring extra complexity when it comes to explainability, transparency, and the risk management of the system. However, the provider is obliged under the high risk classification system to provide all the necessary documentation for the model, and as well register it within an EU database, again, in the case of the high risk. The next step is the distributor, or the next operator would be the distributor, which is actually another actor. A distributor will need to ensure that the storage and transport of a system is done appropriately and does not affect any properties of the AI system. So once it's being distributed to the end user. A distributor will also make the system available to the market and will keep the record of certification for the system for at least 10 years. I omitted here the importer, but the importer, very similarly to the distributor, is actually an authorized representative that will place a system in the market. Let's say an US company with a EU representative. The end one, which is the deployer, actually is the user of the system and has the responsibility to ensure the right use of data, safeguard human oversight, and monitor the system appropriately. Again, the end user will be responsible actually for the working of the system. So it could be that in some cases in the insurance industry, we will get to work with already provided or distributed AI systems. So we as deployers or as users of our models, we might be the end responsibles of how those models are working. So we need to rely very carefully on the information that is provided by the distributor or the provider and the transparency surrounding the model. So when looking at the Act in more detail, we see that actually the Act is as being risk-based regulatory framework. What concerns us in terms of the organizational structuring is the risks that rise from the systems themselves, and how can you map those risks to the categories of the AI Act. Firstly, a good risk management framework is crucial within the organization. And just as an illustration, I think as an actuary working in an organization and acting holistically, it's quite important. For example, relying on a DevOps framework, such as the one that you see here on your left-hand side, that basically in an automated fashion shows you all the steps an AI system walks through its life cycle. So you will have to deal, for example, with data quality, accuracy, security. At the same time, when you develop a model, you will have to deal with assumptions, parameters, fitting, and also with training and test data sets. Similarly, when operating a model, so not necessarily being involved in the development phase, you need to have the knowledge on how to scale the technology, which type of reporting and disclosure you have to do, as well as how transparent and explainable a system can be, and how that will align actually with your business needs. So once you have a mapping of all these risks within the organization you work for, you will come to a conclusion that many of these aspects are covered, which the AI Act actually also stipulates, such as the GDPR, Data Act, DORA, or the Insurance Distribution Directives. Those are relevant, and I think we as actuaries need to understand the current regulations much better than before in order to understand how an AI systems can be placed responsibly within our organizations and in the end in the market towards the consumer. Actuaries will have also more responsibilities in terms of working interdisciplinary, for example, working together with ontology or prompt engineers, understanding programming languages, as well as developing governance frameworks which are more automated than before, using DevOps or MLOps infrastructures, and of course act as a bridge among specialized teams. So I think there are lots of responsibilities, but also opportunities for actuaries. And I think the upcoming presentations will give you also more detail on how we can act as actuaries. So Jonas, I would like to give you the word from now.
Thank you very much, Bogdan, and hello, everyone. Bogdan has given us a first view on what the AI Act actually is, and what I would like to do now is to provide you a bit of a market view from what I see at our clients, and then convert to, okay, what does this mean for actuarial work, which is quite a difficult question, but let me try to give you at least some ideas. So when we look at the market, there are essentially two steps that are very recommendable to look at and approach the EU AI Act. The first one is the AI inventory. I'll come to it in a second. The second one is, how do you design and implement the risk mitigation measures? On the first point, the AI inventory, it's really about structurally collecting all the information that is needed for the AI Act. And the framework you see here is potentially even going beyond the AI Act and is applicable to regions outside the European Union. So the first one is, we like to call it relevance analysis of the AI Act articles, which means, and on the next slide, you see an example in a minute, you go through every article in the AI Act and you make very clear on its what the relevance is for your specific company. Is it relating to high risk, prohibited areas, and the like? And what are the links to other regulatory frameworks such as Solvency II or the like? An associated question with this point 1A is also, when you work in an international insurance group, also outside the European Union, the question is, how do you combine the different frameworks on regulations regarding AI? And there are different approaches, and typically these discussions are not very simple, because some clients go the direction to say the EU AI Act, we like it and it's a good basis and it's the minimal requirement globally. And if there are local considerations on top, they need to be considered, of course. But you can also take a much more decentralized approach and just go on the local field. But this has a lot of feedback effects on how you construct the governance and the processes around. Point 1B here is, once you understand what the AI Act really means for your specific company, what are my AI systems in the company? And there's a clear definition in Article 3, what an AI system is. However, what we see in the market, there's no, let's say, exactly similar interpretation of this article. So we see different approaches there. And this list needs to be updated, of course, regularly, because AI systems are added to your workflows. And once you have this list, you can say, okay, what are the respective risk levels of each AI system? And what is the value chain position? And once you have this very structurally, it's very easy to follow up on what is your inventory and what do you need to design around that. The second point on risk mitigation measures, it's really about identifying, mitigating, and managing all the AI system risks. And here it states in accordance with regulatory requirements, so it stretches beyond purely the EU AI Act. Potentially, it can also include others like Bogdan mentioned before, like GDPR. And the first point you always need to think about is what is the governance and the responsibilities around. Typically, a lot of governance and responsibilities are already there due to Solvency II in the European Union, due to other governance vehicles within companies. Sometimes additional roles are needed within the EU AI Act to be fully compliant, but sometimes most of it is already there. Point 2b, processes. And again, I will come to it in a minute. When you look at the application of an AI system, there are many, many process steps. And what we see is, in particular within the high risk area, every process step needs to be addressed separately to be fully compliant. But again, a lot of this is often already there. And then things like technical standards, of course, need to be developed. Point 2d is also quite interesting when speaking about tools and platforms. What happens in a lot of companies is AI is a super interesting topic. Every executive likes it. And then tools, are applied wildly across the organization. And the question is, how do you design it that the tools that are being used are within companies' risk appetite, or maybe is a platform a good solution where you have a central platform and local entities can use the specific applications. And there are many, many ways how to do this. Point 2e, also very important regarding trainings. So professional usage is required and training is definitely needed within the organization. And maybe let me quickly deep dive on the 2 points marked in yellow here. So the step 1a on this relevance assessment. And here it's one example how you can do it, but it's really good to read the article, understand it for yourself, what it means. And here are 5 particular examples. So articles 9, 17, 18, 19, and 26, which relate to topics that are typically addressed already within Solvency II. And the question is then, which really needs to be answered very critically, what can you use from all the processes, governance that's already there from Solvency II? And typically there's a lot of efficiency in that process where you can leverage what's already there. I think that's one important point to consider. On the next slide, this is how you can, for example, design such a life cycle. So first you need to design your application, then you build it, then you test it, then you deploy it, and then you monitor it. And training is also needed. And the question is, if you're in the high-risk use cases, you can think about a lot of things that should be there in each of these process steps. And here is an illustrative example. What we see in the design phase typically should be a risk assessment, and as the EU AI states, there should be a fundamental rights impact assessment. And when you read those points, some of them will be very familiar because many companies are doing them already today. Technical testing, user testing with the end user, and things like that is very often already fully developed. However, when you deploy the EU AI, please really critically look through all the articles and whether your current setup already satisfies all those articles. Potentially, you need to add one or the other, but my point is, we as actuaries can definitely build on our knowledge and our experience we have on these modeling cycles. And avoid that, you know, you have a big efficiency loss in terms of implementing the EU AI Act. You don't need to reinvent the wheel here. What's important to note here, what we see in the market is that these discussions trigger more and more that multiple roles are engaged in such discussions beyond purely actuaries. So there's mostly also business on board, compliance, data scientists, data experts, software engineers, and the like. So it's getting more and more, let's say, linked to other areas. But my point is here, just to sum it up, we can build as actuaries already on a lot of things that are already there. And now what does it mean for actuaries? And let me start with a bit of a different view on when we look at our clients, which clients are really successful in the application of AI. And typically we see the 4 key success factors mentioned here. First of it, AI needs to be a top management attention because the value in AI is tremendous. However, the downside risks are as well. And if you don't manage this properly, and that's the second point, if you don't manage this professionally and responsibly in the long term, you're likely not going to be successful. So there needs to be training in the companies, and actuaries can play a vital role with their expertise, with their modeling experience, with the data experience, with the code of conduct to really ensure that AI is used professionally along the full life cycle. And that depends very much for each and every one of you what your specific role is. So there's no answer that's easy, okay, this is what it means for actuaries, because depending on whether you build models, apply models, monitor models, this can be very different. Thirdly, the responsible use of AI in the end should be practical and economical, which means please build on the things that are already there in your organization to minimize cost and bureaucracy, while everything needs to be professional. Because otherwise it can get very costly and you are lost in details, and that's also not the direction that's good. And thirdly, that's very important, risk management needs to happen across the full AI use case lifecycle. We've touched on this, but let me quickly dive deep into this first topic, which is not directly linked to actuaries, but I think we can influence a bit what's happening in many companies. So as said, so if things go wrong with AI, there can be supervisory measures. There can be legal disputes. And we see this more and more, in particular in the US, in the insurance industry. In the European Union, less so, but the dynamic is definitely that also consumers are more and more focused on AI outcomes. So in the US, for example, there's one litigation case on health insurance where an AI is applied in claims, and some people didn't get their benefits, and there was a big legal battle around that. Thirdly, financial losses. Bogdan, you mentioned it briefly, so they can be severe within the EU AI Act if in case of prohibited AI practices, and reputational damage. So there is risk. However, some statistics on the right, which I can kind of confirm from my experience, all executives at the moment are really focused on AI. Great, I can leverage some synergies and efficiencies, and that's great. And a lot of companies do have some AI usage guidelines, which is good and not surprising because according to Solvency II, you need to have some model guidelines. However, on the other side of the picture, only 15% of workers really see that they have the necessary education to really use those tools. And only 7% consider them as like outputs from AI is completely trustworthy for their specific work tasks. So I think there's a huge gap between what management wants and what organizations can deliver at the moment. And actuaries can play a very pivotal role to really guide this process. And this brings me to the conclusion and why it really matters for actuaries. So As said, executives are fully on the topic on AI. If you apply it responsibly, it can have huge benefits. It can improve customer experience, can drive innovation. So that's all good. And the AI definitely accelerates this professionalization. While at the same time, companies can leverage the existing risk frameworks, building on what actuaries are doing at the moment and have built over the years. And this all in completion leads to a unique chance for our profession, where we can at different points in the organization can really add value through applying our knowledge we have and our experience we have. But that depends really on each and every one of us. And that's really my ask to you. Don't be shy, really engage in discussions in your companies and leverage your values and also your experience you have. Thank you.
Thank you, Bogdan. Thank you, Jonas. So there will be a lot of things to do with the AI Act. And we know that EIOPA will be instrumental in showing the way on how we really work in insurance and pensions in the area of AI. So I'm happy to tell you that we have insights from EIOPA in the next presentation, and I'm happy to invite Santiago Escudero Ossorio to give his presentation on EIOPA's insights on the AI Act. So Santiago works as an expert on digital finance at EIOPA. He has been following the legislative process leading up to the approval of the AI Act and is currently involved in EIOPA's effort to ensure a smooth implementation of the Act. Santiago has been working with supervisors across all these sectors for 19 years. So, Santiago, the floor is yours, please.
Thank you very much, Esko, and thank you very much for the invitation to the webinar. It's a pleasure for me to be here. So, as you know, EIOPA is the authority for the insurance sector, and we work together with national competent authorities in the insurance sector and in the EIOPA digitalization team, which is the team in which I'm working. We follow up regulatory developments, monitor the market, and contribute to the discussion and analyze how the potential impact of these regulations in the insurance market to try to contribute to this to the implementation, the smooth implementation. So, and this is what we have been doing over the last years in relation to AI, and this is what I'm going to present today. So, in this presentation, I will provide. Just let me try to move to the next slide. Sorry. Okay, great. So in the presentation, I will start to provide some key findings of the EIOPA digitalization report on the digitalization in the insurance sector that we published in April this year. Then I will focus on the regulatory framework, on the AI Act, and we'll try to provide a different perspective. In the previous presentation, you already have been given an overview of the AI Act, but I will try to provide to focus on some key areas of discussion in terms of the different interpretations for the implementation of the AI Act in the insurance sector. And then finally, I will provide an overview of other EIOPA activities very briefly on AI that we are currently undertaking. So in relation to the EIOPA digitalization report. This next slide, this doesn't work very well. Sorry. So, okay, here it is. Sorry. So we published this digitalization market monitoring digitalization report in April, and it's based on a survey that we conducted last year throughout the insurance sector, in which we gather evidence, we gather input on the state of play of digitalization. We collected input relating to the digitalization strategies, the technologies, the new technologies that are being applied in the insurance sector, the changes in the business models, and for example, also the identification of barriers and opportunities. We received 209 responses from 22 member states, and then the final report, that we published in April, we observed that basically that the digitalization trend is a very clear trend, and that it's expected to continue increasing in the coming years. So so focusing now on the adoption of the digitalization in relation to artificial intelligence, one key findings of the report is that AI is used in 50% in the non-life insurance, while it's in 25% in the life insurance. But the thing is that respondents also said that the use of AI is expected to increase significantly in the coming years. It has to be highlighted that this survey was conducted right after the release, right before, sorry, the release of the ChatGPT model, the ChatGPT. So what I mean is that the input that we gather, it may not fully reflect the impact that the generative AI has had in the market. Also, another key takeaway from the report is that AI is most often used with human oversight, following this model where the AI model supports humans, and that models are in general simple and developed in-house. And one key barrier, and this is something very important that it was highlighted in the input provided, is that the key barrier for the adoption of AI in general for digitalization is to get the adequate talents and skills. So this is very relevant it's something that we need to keep in mind. And then I will not spend much on this, because this is just to provide you an overview of the key, the main use cases that we observed that were reported. So as you can see, most use cases were in customer service, and chatbots are the most popular AI tool that is being used. But as you can see, there are also quite a few use cases reported in the pricing and in the underwriting activities, which are relevant to actuaries, of course. So now let's get into the second, in which I will focus on the regulatory areas, and as I mentioned before, I will try to provide a different view. It's most on the different key areas of discussion where there are some concerns that have been voiced by the different stakeholders that we have been talking to, and in the internal discussions that we have had at EIOPA. But before getting into that, I have also included an overview of the AI Act, but I will not spend much time on this because it has already been provided. Let me just highlight the first thing is that you need to consider that the AI Act, the objective of the AI Act is to protect fundamental rights. So it's different from sectoral legislation, which is focused on consumer protection and solvency and potential rules. So the AI Act aims to complement the existing regulatory framework to address some risks that were not addressed. Secondly, the AI Act is horizontal, and it's something very important also because the AI Act does not apply only to the financial sector. It applies to any other sector you can think of where an AI system can be used. So, I mean, from transportation and anything that you can think of, toys, anything. So, and this is important because it takes a different approach compared to financial legislation, and I would say that the approach following the AI Act it's closer to product legislation, so it's a completely different approach compared to the financial legislation. And as it has already been mentioned, there are three. It follows a risk-based approach. I will not insist on that. And within this risk-based approach, there is well, you can say two high-risk use cases in the insurance sector, which is the risk assessment of and pricing in relation to natural persons in the case of life and health insurance. And the AI Act imposes a comprehensive set of obligations that in the previous presentation you have already been informed about. So So in the next slide is just an overview of all these obligations, that these obligations apply to the AI system themselves, to the providers, to the developers of the high-risk systems, and also to the deployers. So now I will get into the key discussions, in relation to the implementation of the AI Act in the insurance sector. So I have selected those that, there are many of them, but I have selected those that I think that could be more relevant to you. The 4 questions are, the first 2 are in relation to the scope, the definition of an AI system. The second is the definition of the high-risk use case in the insurance sector. The third one, it will be on the interplay between the AI Act and the insurance sector legislation, because as has been mentioned before, both apply. And finally, it's not strictly related to the AI Act, but we will try to reflect on the role of the actuaries in the adaptation process that all entities are following in relation to the adoption of the AI technology. So just 3 caveats, if I may. So first, I will present the questions and provide some additional insights, which are my personal views, and I'm personal views that are based on because I've been following this thing for over the last 1.5 years, more or less. But in any case, there's no EIOPA formal position on this. And also, there are some questions where EIOPA simply will not be able to provide an answer, because some of them are interpretation issues of level 1 legislation, and we do not have the competence to resolve those questions that need to be ultimately solved by the Commission. But having said that, on the first slide, on the slide that you have in front of you, you can see the definition of AI system. And the definition of AI system is in Article 3 and Recital 12. Recital 12 provides further information about what is considered an AI system in order to try to narrow down the definition. The definition is aligned with the OECD definition. Because compared to the original version, the original proposal of the Commission, the definition was much broader. So the aim is try to really narrow down the definition and to be as clear as possible as to the what is an AI system within the scope of the AI Act. But the first question, I think this is a question, it's a key question that has already been asked in the on the chat, is are GLMs in or out of the scope? And this is a key question, a key concern for the industry, and I will reflect on that now. And then you need to consider that also the Commission it has to further develop the AI Act and provide further clarifications. And in this regard, it's important that the Commission will develop some guidelines on the application of the AI definition to further develop this definition. So let me just reflect on this slide. So first of all, even though, as I said, the Commission has to develop these guidelines, and even though there's no specific deadline for developing these guidelines on the definition, the thing is that, and even though the AI Act will not apply to the high-risk use case in the insurance sector and to other high-risk use cases until 2026. However, there are other requirements, such as the prohibitions for those systems that are prohibited, that will start to apply in 6 months. That means that the Commission, because before you can start applying any requirements, such as the prohibitions requirements, you need to have a definition of the AI. I mean, so these guidelines, what I mean is that these guidelines need to be developed soon, in early 2025, I think, by the Commission. They should develop this. They should issue these guidelines. So these guidelines hopefully will clarify something. But the thing is, that I mentioned before, the AI Act is horizontal. So there are questions whether these guidelines will really clarify the scope of the AI Act definition, and more specifically, whether GLMs are in or out of the scope. But at the same time, I assume that the Commission wants this to be very clear, because GLMs, I suppose, that are not only used in the insurance sector. So the Commission is the first that is very, very interested in having a common understanding of this question. In any case, as I said before, we are very much aware of this concern, and this is something that we have been discussing from the very beginning, because changes the impact of the AI Act in the insurance sector, and there is a need for a consistent interpretation that is pretty clear. And if you ask me the specific question on the chat, whether these are in or out, I mean, of course, I cannot answer that question, unfortunately. But what I can say is that I've been discussing this question with consulting firms, with the stakeholders, and with some academics. And during all these discussions, in general, I mean, the feeling that I have is that all of them, most of them, believe that the definition is so broad that there is no a real argument to exclude GLMs from the scope. At the same time, there are some of them that, based on recital 12, they believe that they should be excluded, in fact, because the recital 12 requires AI system to have, let me read, to have the capability to infer, capability of AI systems to derive models or algorithms from inputs data. And some academics in particular, they told me, okay, this requirement could exclude GLMs. But as I said, there's no question. We are looking into it, and we expect that the guidelines by the Commission will further clarify this question. And of course, we are contributing to that discussion. So then, if we go to the next slide, which is on the insurance use case. The second question, I mean, let's assume that the AI system that you as actuaries are using, the risk assessment and pricing, is within it's an AI system, is within the scope of the AI Act. And now you need to determine whether this is a high-risk system as defined in the AI Act in Annex 3. So if it's a system that for risk assessment and pricing in relation to life and health insurance. So this is, again, a consistent interpretation of the insurance use case is also very relevant to us. It's key because there is a need for supervisors and for the industry, and this is also a concern. So the question is whether there is a need to further delineate this definition. There's really a need to further define and to be more clear. And in that regard, we have received some comments around whether risk assessment could unintendedly cover other areas of the insurance value chain. And so in this regard, I think that as opposed to the previous discussion on the definition of AI system, which seems to me much more cross-sectoral, the definition of the insurance use case is a sectoral issue. So if there is a need to provide any further clarity on the definition, is something that arguably we could, in the insurance sector, could develop some kind of guidance. But in any case, again, the Commission will develop guidelines on this, and they will provide some examples on high risk and non-high risk use cases. But again, it's horizontal; it will cover everything. But this will be developed by I think it's February 2026. Yes, it's on the slide. So the question is, well, as I said, is whether there is a need to further delineate this. And there is a second angle that you can look at in relation to the definition of the high risk use case, and is the possibility for exemptions. In Article 6.3, I think, the AI Act allows providers complying with certain criteria to exempt. I mean, a high risk system which should be considered high risk if you comply with certain criteria, because it's, for example, it's performs a very narrow type of function, then you could exempt them, and you could consider it that it's not high risk. So, but the question is whether we need to further, because these criteria are open for interpretation again. So the question is whether we would need a sectoral level also to provide further clarity and to further define this criteria. And this is something, as opposed to the wording of the insurance use case, this is something that it might be not that sectoral specific, because these criteria apply across all sectors. But in any case, again, we need to also take into account the guidelines that will be developed by the Commission, and we need to ensure that there is clarity about around this issue. So if we go to the next slide, this is a very, very important element, something that we consider very relevant at EIOPA, which is the interplay between the AAE Act and insurance sector legislation. As you can see on the slide, I have just tried to provide an overview of the regulatory framework, very, very simple, but to give you an idea of, as I mentioned before, the AAE Act applied to mainly to high-risk AI systems, but to AI systems other than high risk, I mean, beyond the high risk insurance use case, which is just on life and health insurance risk pricing. The AI Act just imposed some very, very general and simple requirements. However, the insurance sector legislation applies to all AI use cases, to high risk and other than high risk, because high risk use cases in the AI Act are qualified as high risk because taking into account the objectives of the AI Act, which is the protection of fundamental rights, not taking into account consumer protection or solvency issues. So the idea here is very simple. It's just that both apply. So you need to consider that you need to apply the AI Act when you are using a high-risk AI system, but in any case, you will need to apply insurance sector legislation, whether no matter whether the use case is high risk or non-high risk. So everything applies. And this is such an important idea in our view, because I mean, the AI Act has had a big impact on the market, but we wanted the market not to forget that we still have to apply insurance sector legislation. And in that respect, we to highlight this idea, we together with right after the publication of the final text of the AI Act, we published this fact sheet in which we basically aim to convey that message, that the regulatory framework applicable to AI in the insurance sector, which is the AI Act, and also the insurance sector legislation. And in relation to the interplay, I mean, the first bullet point is just the idea that I have just presented. So, but when you think about the interplay between the AI Act and insurance sector legislation, one, I mean, given that there is an overlap between both, because the AI Act imposes a comprehensive governance framework that will be applied to AI high-risk systems. And in the insurance sector legislation, insurance entities already have to comply with a comprehensive governance framework. So one first step could be to conduct a mapping between AI Act requirements and sectoral legislation and solvency and also the ADD. And when you conduct this mapping, I think it's clear that there is the governance framework in the insurance sector it's all about the same. It's very similar to the AI Act governance framework. The difference is that, of course, the AI Act is much more specific, much more developed, and that introduces some new requirements. So, but the key message here is that there are in the insurance sector legislation, there are requirements that are closely related to AI Act requirements. And I'm not thinking just about solvency, but also about the IDD, transparency requirements, product oversight and governance requirements. So there is a clear interlink between the AI Act and the insurance sector legislation. And keeping that in mind, so the AI Act acknowledges that and introduces some derogations for financial institutions and, of course, for insurance institutions. But despite those derogations, the application of the AI Act is not simple at all. I mean, it's because derogations are limited. I mean, there's no one single derogation stating, okay, you can, if you comply with financial sector legislation, then you don't have to comply with the AI Act. It's not that at all. The language, in some cases, the financial institutions, that is the case. For example, for compliance with quality management system, if you comply with governance requirements under solvency, then it is considered that you have already complied. But in some other cases, like risk managers assessment, it requires to integrate the obligations in the AI Act into the existing risk management system. So you need to integrate both sets of requirements, and there is a reason, as I said before, because the AI Act has a different different objectives, and the sectoral legislation was not developed with the AI in mind. So the AI Act is much more specific and covers different risks and aims to address different risks. So the AI Act also introduces new or more specific requirements, and I'm thinking here some of them have already been mentioned, like the fundamental rights impact assessment. There's a need to provide to conduct an assessment also before a conformity assessment. I mean, there is a wide range of different new or more specific requirements, also on data governance and discrimination. So it's not that simple, the application of the AI in the insurance sector. And another point that I wanted to highlight is the difference in the approach in the AI Act and the insurance sector legislation. While the AI Act applies mainly to providers, those that develop the systems, the insurance sector legislation applies to supervised entities. I mean, if you are a supervised entity and an insurance entity and you are using an AI system developed by a provider, by a third party, then you would need to comply with the whole insurance sector legislation. But in relation to the AI Act, you will have to comply as a deployer, not as a provider. So it's a different approach that needs to be taken into account. And finally, another issue is the difference between this different treatment of high-risk AI system and AI system other than high-risk raises questions as to whether there should be two different governance frameworks, which I don't think should be the case. So finally,
please, Santiago, try to get to the wrap up because we are running out of time.
Okay, great, no worries. So I will just go to the last slide, in which I provide an overview of the activities of the EIOPA in 2024. We have created an AI project group in which we are assessing the impact of the AI Act and all these questions that I have already mentioned. We are discussing whether there is a need to provide guidance, and we are also working together with national competent authorities on the supervision. And other authorities, other activities, we are also monitoring market developments, and part of this is the digitalization report that I mentioned before, and also contributing to other activities at international level, like this application paper that is being developed by IAIS. And yeah, this is it. Thank you.
Okay, many thanks, Santiago. And we certainly know that the interplay between the horizontal legislation of the AI Act and our sector-wise regulation, they will meet here. And certainly it's a difficult problem not to have duplicating or even contradicting regulation. But we'll probably end up in Q&A for that. And now it's time for how AI is actually used nowadays in practice. And we have the pleasure of having Behar from CNP telling us about AI in practice, use of AI in CNP. So Thomas is the Deputy CEO and CFXFO of CNP Assurance, and he is instrumental in AI and ethics in his company. Thomas is also an actuary and one of the past AAE chairpersons. I asked from ChatGPT what CFXFO stands for. It said, without additional details from CNP Assurance or a specific definition provided by the company, the exact meaning of CFXFO remains unclear. It would be worth reaching out directly to the company for clarification. So I'm doing that now. And Thomas, the floor is yours now.
Thank you very much, Esko. So I will give already clarification on that. So I'm Chief Financial Officer, as usual, but also Extra Financial Officer, meaning that we are now seeing the impact of CNP Insurance, not only on the profits of the year, but also on the different impacts that we may have on the planet, the society, and the customers, and so on. So we are looking about what is the performance of the company on the different and various impacts that we may have on the different stakeholders of the company. So that's why now I'm looking of all of that sustainable matters. But let's come to artificial intelligence, and we will see that, in fact, so we are doing a lot of artificial intelligence in CNP insurance, and I have no pretension of generalization, so I will only give examples about what we are doing. So only example, a practical view from the industry on that. But what we are doing, and even if we are doing artificial intelligence everywhere, our opinion at this stage is that we are not doing artificial intelligence in the sense of the Artificial Intelligence Act. So I'll just will not develop just now. So please wait until the end of the presentation where you will have the answer to that. So if I move to the next slide, so it's me. So we are for 10 years now a data lab, which is responsible for all artificial intelligence in the company, and we have create ethics on artificial intelligence, and I will develop that also later. For people who don't know CNP Insurance, just a flavor. So we are number 5 in Europe by the size of the assets we are managing, around 7,000 employees around the world, 1.5 billion euros, and the solvency capital requirement end of last year, 253%. So a lot of sustainable requirements that we have. We are public owned with through Banque Postale and Post Group, and we are present in Europe and South America, number 3 in South America. So that's all in number 3 in Brazil. So that's all what I would like to say about us. Let's go first now to the artificial intelligence matters. So what is really important is that we are using artificial intelligence quite everywhere nowadays in the company. So from all the chain value of the insurance. So on distribution, on underwriting, on operations, on risk management, on claims. So distribution is the major point is to help people from all the networks who are distributing our contract to have a better performance. So it's a way we are using it to have some look about the targeting savings. So it means that we help to better perform the commercial campaign that a network has with the customers. So just by delivering from the whole bench of customers that we have, millions and millions, who have better chance to buy the product. So we can cut by 8 the cost of the commercial campaign by reducing the number of people as a priority to receive and explain. Because you know that explaining a contract as a cost, it gives 1 or 2 hours of interaction between the customer and the network. So if we are able to better perform that and find the best way to better perform the advice that we can give to the customer, depending on the situation of the customers, if we are more successful for that, it will reduce the cost of that. Underwriting, so on medical screening, why should we wait days and days if at the end we say, yes, we can underwrite the contract without any additional premium, without any exclusion. So if we are saying yes at 95%, it should be quite automatic to say yes. But if you say no, it's another way, it's another matter, and you need more instruction and have a human who look at that carefully. So on underwriting, we can reduce also the delay by automatization, all what in fact human were doing. On operation, we have also helped the customers by reducing delay with some automatic processing. So now the customers save the identity card, scan it, send as an image, and it will be an automatic processing of the mail to put directly the documents into the right part of the managing system of the company. Risk management to fight against fraud and also to check a lot of matters and all approximation. We need to respect the law about AML and CFT is also an help that comes from machine learning and so on. Claims, it was also some difficulty. So in life insurance, you can tell us to whom you want to give your money after your death. But sometimes in some old contracts, it's what's not so easy to find the beneficiary. So with that, it's written clauses. We can look at all the clauses and say to the network, please go back to the customer and work with them, because it will be very difficult and it will take days and weeks or months to find the beneficiaries. Please simplify or tell us more about your beneficiary clause. So all of that is in fact how you give more power to reinforce human, to better serve customer, but also to automatize what can be automatized by looking at what humans were doing, but giving more automatization. You avoid taking a lot of time to do some what is clear that can go quickly, to look at what really matters for the customers, the more complex case, the more difficult issue to better serve the customer. At the beginning of that, 10 years ago, we had a difficulty to find dead people in the basis, because it's something surprising, but people are changing their name on 50 years or 60 years. So it's just an example that is given in his screen. Jean Dupont become Jean Dupont with a D, it was a T. So no chance in a pure logical way to find them, but with the algorithm that was developed, and we take 3 characters per 3 characters, we are doing a scoring, and with that we have only a letter that is different. You can find it. So at the base is machine learning, but it gives at the end a scoring, which is rules-based in the end, and you apply to the data. So you have a difference between training and learning with data, and then applying to new data with a human between that, looking at the performance. I will move to the next slide. So you have the different areas. So it was developed by actuaries in the data lab, actuaries who are also data scientists, who have developed that from time to time. So it's a journey of 10 years. So we have computer vision and OCR now being able to recognize image, meaning documents or photos or whatever, which are in the documents received. Machine learning and structured data to have self-learning predictive algorithm, but that will never be applied without a human between the fabrication of the model and the use of the model. Natural language interpretation and speech recognition. So it's, for example, to help call center, to automatic mail processing. So meaning that if you receive thousands, millions of mails, just to know where to go and where to address in the undertaking. And of course, robotics, but it's more for IT guys for that. I move for the next one. So it's the 10 years we go. So from 2020, we have had ethics, just to be sure that we are not in default in all the algorithm that we are using, no discrimination. And we have actuaries on both sides, from the data lab with data scientists and with the ethics. And it's now the actual function which is in charge of that. Why actuaries? Because it's the better place where you have people who can really understand what the algorithm are doing. Of course, the artificial intelligence function works in line with a committee where you have also the risk function and the compliance function. But the primary responsibility for actuaries inside the actual function. So we are working to have operational efficiency. So the objectives was it was costless. So developing one algorithm and putting it in place in the undertaking is less than 100,000 euros to develop and finish it in usually 3 to 4 months. So it's something really quick that works well with the IT, which is in the digital factory. So actuaries are better placed to interpret what the business is explaining. So we need actuaries just to really understand what it really matters from the business, to develop the algorithm, to look with the ethics and the actual function if everything is fine for discrimination, and then to have the digital factory to transform to API and to implement in the system. So it's all the key points that helps to be a success for that. So we, as actuaries, interact closely with IT and with the BUs. So we have this chain value for creating algorithms. So I will not develop that more than these slides. We have put in place an ethics policy with some principles you see on the screen, just to be sure that what we are developing respect all the ethics that we need to place. So principle 1, we place data protection and privacy, GDPR, especially at the heart of the concern. We ensure transparency in the use of IA tools, no black box. We ensure the fairness of IA tools by combating any form of bias or discrimination. We use IA tools responsibly, including checking reliability, fairness, and impact, and especially important with the new generative AI, where you have hallucination, meaning that the Copilot and others can give you very bad answers, which are founded on nothing. So it's really something important to check that, especially with generative AI. And at the end, what we are doing is to reinforce and have people at the heart of our AI tools who are better armed, better equipped, that we avoid IA to perform their job. So on these slides, I compared our ethical principles with ChatGPT and with the AAE principles of ethical and professional behavior. And in fact, what you see is quite the same words who are key in these policies: fairness or integrity, transparency or communication, safety, accountability or impartiality, privacy or compliance, human oversight or professional judgments, which are really points of importance. I will now go, in addition to what we heard from EIOPA or AAE to Artificial Intelligence Act. So it's really a key act for Europe. So this one you have seen, so it's entered into force with 6 to 36 months to bring into compliance. So it's what we have already heard. And what I would like to propose here is some 3 decisions that we have developed. So I'm not sure today that it will be adopted and seen everywhere as a way you have to look at artificial intelligence acts, but it's a way today that we think we may interpret these acts in the way you have to define if you are using an artificial intelligence system or an high-risk artificial intelligence system. In fact, what we think at this stage is that our system is based on rules defined by humans to automatically execute operation. So on the first question, our wish is to answer a yes. We are not, we don't have IA system. It means that every time as GLM, we are using artificial intelligence, it always to train and learn and define more complex rules to apply to new operations. We have no automatic and self-learning system that we go directly from the computer to be applied by the system. every time we have a data scientist, actuary, who is looking about the results of what we have learned from the data to apply that to other data. So it means that on the first question, it's always yes. It means that we are always a human between how we have produced the algorithm and how we apply that. So it means that concerning the definition, if at the first question you answer yes, we think that we are on the right, we are not using an IA system. So that's the way we look at it, and you have the full tree, which is presented here in the system. I will be happy to have later reactions, but it will be a question of work in every countries with supervision and so on, to be clear on that. And I have add also, and you will be able to look at that, if your system is an IA system, is it in addition as high risk? And you have, as it was expressed by EIOPA and by Bogdan, all the different questions that you need to look at when looking at the regulation to see if you are high risk or not high risk IA system. So in Esko, so it was so I give you back 2 minutes, but clearly to say that what as a conclusion that I would like to say from my experience in CNP, so it was in fact a new field of game for actuaries, either in the creation of the algorithm, either in the way we can create value for the insurance industry as actuaries by being able to interpret what are the wish or the difficulty or the challenges of the different work of the enterprise or the firms to interpret, find the right model, and then apply it and give it to the IT system. So it's really a new way that you can take as actuaries to work on that and bring value to the company. In a way, it's a way to bring back actuaries as the core center engineers of the insurance industry. So it's what I could wish for all of you, and that's the conclusion of my presentation.
Thank you, Thomas, for encouraging words for our profession and the future of us. So I think there will be some debate in the Q&A on the role of GLMs and whether what should be the approach to them. But before the Q&A, we still have some things on XAI, explainable artificial intelligence, at least to actuaries to conform with our professional standards. We need to understand how our models work. And now we have Claudio Senatore talking about explainable artificial intelligence. Or as I said, it's usually abbreviated as XAI. So we are more than happy to hear Claudio's thoughts about that. Claudio is a global insurance solution leader at the SAS Institute after experience in the insurance and reinsurance worlds, and he's also vice chair of our data science, actuarial intelligence and data science working group of the AAE. So Claudio, please, the floor is yours now.
Thank you, Esko, and welcome to everybody. Thanks for joining our webinar. So we have only 15 minutes. Let's jump directly on the slides and our subject. So explainable artificial intelligence. Recently, we have published a paper as European Actuarial Association on this subject, aimed more to the C-levels. So it might be useful for you and nice also to go and download and read this paper. So in the explainable artificial intelligence research field is a quite let's say big one. There are several ways to categorize the explainable artificial intelligence models. Today, I would like to use this one that I read recently in a paper that is also reported here as a reference, because it is really this categorization is functional in conveying, you know, the main concept that I would like to communicate. You know, so we usually hear the explainable artificial intelligence models categorized in, you know, local or global. Today, I would like to use this alternative categorization as red and blue models or methodologies. Red as acronym in this case, you know, means models, methodologies aimed toward research, exploring, and debugging models. Whereas blue, the acronym blue stands for models, methodologies that are used to foster, to grant, to ensure a responsible, legal, and ethical use of the artificial intelligence models, building trust, you know, toward those models. And by the way, those two acronyms are not chosen by chance, you know. They are also referring to the IT work, to the usually IT teams that are working in this domain. There is the red team and the blue team. You know, if you heard about it. So the red teaming, or the red team, is the team that is trying to force, to look for vulnerabilities, issues within your AI models. Whereas the blue team, on the other side, is the one that is somehow protecting it, you know, somehow that is it's a different, with a different aim. It's the aim of maintaining the model. So they have two teams with different goals, and the acronyms were chosen also in the light of these thing that is a very specific thing of the IT department. But let's move on some more specific details. So the red for the research, explore, and debugging use of the explainable artificial model is, let's say, the audience, the users of these methodologies are usually very high, let's say, expert developers. So people that have a very deep knowledge of the methodologies of the models, and usually also high technical knowledge. So those are methodologies, models used by these people, and usually the same users have high level of accessibility. So as a developer, as a coder, usually you have direct access to training data, or directly access to the model, to the parameter of the data. Therefore, usually the users of these methodologies are users that have high level of technical knowledge, you know. And basically those are people that are using explainable artificial intelligence models for specific aims that most of the times are within their, you know, their work, that is, you know, maybe training or deploying a model. Whereas the blue methodologies are aimed for a completely different type of user, you know. So the average user of these methodologies is most of the time is the final user. It might be the final user internally to your company, but also the final user externally to the company, you know. So some examples might be policyholder or bank customer, patients, if our AI models applied within the health domain. Obviously, in the insurance domain, we are talking about, for example, policyholders. I repeat, but not only. It might be also people internal to your company that are not necessarily, let's say, expert in AI or in coding and developing. Usually, these people have a low level of accessibility to the data. Okay, usually they don't have access to the data. Usually they don't have access to the model, to the parameters, and therefore usually those are people with a low level of technical knowledge. The use of explainable AI, and I repeat, this categorization is particularly functional to the concept that I would like to convey. The main concept that I would like to convey is that basically there is no single key to unlock all doors, you know? So there is no magic wand. There are several XI methodologies and models, and the key point is that each of them is good for the specific aim that you have. There is no single model that always fits for all your methodology, for all your use cases, for all the uses that you want to do it. So there is the right model for the right audience and the specific goal. Basically, what you have to understand is, in deciding which XI models you want to apply, is who is the end user. She's an expert, she's a developer, she's a policy holder. What is the aim? So you are building this model, why? You are building this model to give the possibility to a policyholder to understand why he received a specific premium or he was not accepted as a policyholder. You are building this model to assess the model itself, to assess if a model has a bias or if there are outliers. So this is another thing that you need to understand. What is the interface that it can be used? Explainable artificial intelligence models can be, from an interface point of view, so from a usability point of view, might be really tricky, especially the one that are local explainable artificial intelligence, because we are working at local level, at not at global level. This means that in theory you should be able to define for each instance at policyholder level and make the model work at instance level. Okay, so this might be one of the difficulties that you might have. Finally, what type and level of model data access it is necessary? It might be that to use a specific model, you will need access to specific data, to your training data set or your test data set. And this is not always possible. So it depends at which level of your value chain you are building and adapting it. So the real point is exactly that one. Explainable artificial intelligence models can be applied at different levels of the insurance value chain. They can be applied at development level, deployment level, or when you are studying a new tariff, they can be applied and developed for, I don't know, your marketing colleagues, etc., etc. And not necessarily explanation need to be aimed to user to increase their trust in explained models. There are different motivations to use this technique. For example, it might be that a developer applies a model to understand if the model is exposed to outliers, if there is a bias. Not necessarily these models needs to be applied to simplify the understanding of your model. It might be that those models are very complex, but given that they are used by developers, it is not a problem. So the real key, the key point here is that basically trustworthiness is not the sole aim of the explainable artificial intelligence. The objective and goals depend on the specific case. In some instances, developers will need an explainable model to check, as I said, for specific difficulties. In some cases, you will have to apply it at the end of your process, for example, for policyholders. But the key point is that there is no really single model that best fits for every case. Here we have really two small examples. So, for example, a few months ago, Anthropic published an important study where they developers were able to map each single concept that belonging to their large language models with a one-to-one correspondence of one feature to one concept. This is the monosemantic, the famous, let's say, monosemantic paper that they published. So they were able to see in their trained large language models that there are single features that are uniquely corresponding to single concept. And obviously, what we see here in this slide is it's a simplification of what they found. So they were trying to let's say, to make these findings easily accessible to everyone with this chart, with this chart that is basically representing the single concept that they were able to detect. And obviously, detecting the single concept, they are also able to activate or deactivate it. You might imagine how important it is. And this is an example of red explainable artificial intelligence. So complex models aimed for high level and technical people. Whereas an example of blue XI models is, for example, in this case, the LIME, that is a model that is working at single instance, and that is basically telling you what are the most important variables that contributed in creating this specific outcome. But let's jump in the actuarial world. There are many methodologies that can be categorized in different ways, but which are the most used ones in the specific actuarial world? So those are the 4 ones that I see more often, that we see more often, that are also mainly covered in the many publications that we see coming from the actuarial world. So recently there is a publication of the European Actuarial Association, but before it, the publication coming from the German Actuarial Association, from the French Actuarial Association. Many associations are working on this subject because it's really important. Those 4 are the ones that are most used. Let's say more often I see those. 3 of them are local methodologies, and 1 is a global one. So LIME, ICE, and Shapley value are methodologies that work at single instance level. So they are methodologies that are giving us the possibility to understand why we receive that specific output for that specific instance. I don't know, for that specific policy order, for that specific row within your data set. Whereas the partial dependency plot, that is the last on the right, it's a methodology that works at global level, and it is conceptually really close to the relativity plot that we are used to see and to create when we run our GLMs. Conceptually is there. Obviously, as for the methodologies that we use also in the standard classical statistical models, also these methodologies have limits. The limits are most so, as usually in their hypotheses, So I will not go through all of them because we don't have the time. But in general, the message that I would like to convey is that when you work with a local indicator like the LIME, the ICE, or the SHAP, in this that we see in this slide, you have to pay attention because they can be noisy. Given that we are working at a single instance level, the sampling might really impact on the results of these models. Okay, they can be really sensitive to single values in your data set. Whereas when you are using global indicators like the partial dependency plot, in general, what you have to pay attention to is that they might not capture the complexities of your data set. For example, partial dependency plot, they are at the base of these models, there is the hypothesis that variables are independent, and this is not really always true. Finally, the conclusions. So one important thing is that at the moment there is no actuarial consensus. There is no actuarial consensus around what are the most important variables. So what, let's say, what I could suggest is, please apply more than 1 indicators, more than one model of explainable artificial intelligence. Okay, and this might help you in finding issues, bugs, and also in being more, having more sound results. Finally, seek practical guidance. I see that more and more there are papers, videos, applications done by different people, and look for it because this can really help you. So trustworthiness is something, it's an important word, but please keep in mind that you build trustworthiness in these models in different way and along the entire insurance value chain. So please use the right model for the right aim and for the right users. And I would pause like this, given that my time finished. Thank you.
Thank you, Claudio. That was really great to hear. And as I said already, actuaries need to understand their models when they use them. So it gave much food for thought. Thanks for all the presenters from my side. It was great to hear this overwhelming information about different aspects of AI. And to all members, the slides will be distributed by the AAE after the seminar. But thanks to presenters, thanks to the audience, and now I turn over to Jonas, who will now moderate the Q&A that has already gathered some questions, and I hope there will be more to come. Jonas, please.
Yeah, thank you, Esko. And we've received a few questions if you've been answered, but maybe let me start with the one that appeared quite some times on whether GLMs are AI systems according to the definition of the EU AI Act or not. And there was a follow-up question on what other standard actuarial models could be considered as AI. And what's your view of that in the market? Maybe let me quickly respond. And I mean, it has been answered up to some extent by Santiago already. Thomas touched on it as well. What I can see in the market is the following. So first of all, it's a question of huge debate. And some legal experts are of the opinion that GLMs are not AI systems. However, they always have the disclaimer, it's completely unclear how this will play out in the end. So, and this is indeed something where clarity is still missing. And that's what I see in the market. However, some clients also go beyond, let's say, high risk and AI systems. I mean, the EU AI Act is mainly focused around high risk AI systems and doesn't say a lot about low risk AI systems, but companies are thinking, okay, how do we tackle those low risk ones? Do we also want to professionalize on that and then maybe even beyond AI systems? So that's also a discussion that I see currently with clients. But maybe handing over to Thomas, what's your concrete view on just to recap a bit on RGLMs, AI systems, and do you see in your company applications, actuarial applications that are AI systems?
Yeah, clearly no, because as already said, I have two parts of work. First part is to work on the data and produce algorithm. Even if it's done with IA techniques, at the end, you can say what are the rules. So it becomes logistic rules where you know that A implied B. So it's no more something which is self-learning on data. So you can predict what will be the application of that on new data. So for me, we are not here in artificial intelligence systems in the name of the IA Act.
Okay, and even let's say beyond GLMs, you probably have actuarial applications that go beyond GLMs, I would suppose.
Yeah, it's for every times where you work on data and you can know what are the rules that comes from your work as an actuary. So it's for whatever the techniques you are using, it's always the same, and you can avoid the IA Act if you have clearly a view about and no black box between what you have done and how you can explain it.
Okay, interesting. Esko, yes, please. Handing over to you.
Okay, thanks. If a reaction from me, if I may. Firstly, I think it's really great for insurance that some parts of insurance are recognized as high-risk systems, so central to life that they are recognized as such. It's a recognition to insurance. But then after that, I'm a bit careful in how what this will do, especially to actuarial methods, since like what actuaries need to understand is that we must obey the ISAPS and ESAPS actuarial standards of practice, and they say that we need to understand thoroughly our models. So in the sense, actuaries cannot really give autonomous powers to any of the models, and they need to understand and be able to explain how their model works. So I cannot see how actuarial models can be in the area of really being these actuarial systems that are put to the market. And in addition to that, well, I could also think that the AI Act talks about research and development, where you can use AI. I think that goes back to what Thomas said, that certainly AI is used to develop things, but then you need to understand the models thoroughly when you really apply them vis-a-vis the clients. Thanks.
Thank you. Esko. Bogdan, you raised your hand.
Yeah, I think just to add some fire to the discussion, because it's about the GLMs and maybe more simple actuarial models. So not necessarily life, it could be like motor insurance and so on. But I think that the definition also reflects a lot on the way how adaptive models are and how autonomous they are. So while they vary in the degree of autonomy, it's what the definition says. I think it's important that as actuaries to already build the right frameworks surrounding these models. So let's say you have a simple GLM doing a pricing. It could infer or it could be adaptive if you, for example, would apply it to a dynamic pricing environment where your premium might change on a daily or weekly basis based on the risks that you are facing, driving the car or using telematics and so on. So in such a circumstance, you might get even closer to the definition of what an AI systems because of its adaptability as well as being inferring from the context and the new data that is generated by all these telematics gadgets that the cars have or are connected to. So that's one of the areas that could be quite where there could be some kind of discussions. But irrespective of that, I think if you remember that figure of 8 loop with a risk management framework, once you have an actuarial model and you build the right framework around it, then you would be you would be more enabled to explain that model faster at a faster rate if you have it in a production environment with the right monitoring, right governance structure around it, and the deployment phase and building phase of the model. So if you do it in an automated way, then you can reach faster to what actually the AI Act requires, and then you wouldn't have any more the discussions of am I placing that system in a market, or am I actually a high risk or a low risk? I think it's the way you manage risks in the end that is relevant, and also for the supervisors, rather than having a certain classification, probably. Thank you.
Thank you, Bogdan. Santiago, any reactions from your side?
Well, yes, I have tried to address this question during my presentation. It was one of the key points that I've discussed. So I tend to agree with you mentioned that there is some legal analysis that believes that they should be left out of the scope. And I myself, I'm not a lawyer, but I have been reviewing in detail the recital 12 in particular, which is, I think that's is very, very relevant. And I personally tend to agree with that. But again, I mean, as I said, the Commission is the one that is very, very interested in having a common interpretation on this, because it's not just for the insurance sector. So, and they will be developing, they are now developing the guidelines that will, with the aim to clarify the AI definition, which is a basic element of for the application of the AI Act. So I cannot say whether they are in or out, but I mean, I think it's a key issue, and we are looking into it. And I think there are arguments to leave them out of the scope.
So I think in conclusion, we can say that it's still a topic of debate.
Yes, exactly. Yeah.
Coming back to the second part of this question, that if there are standard actuarial models, whatever standard means, that's a bit of a vague, has a vague meaning, whether these are AI systems. And I've seen with clients actuarial applications that these clients termed as AI systems. For example, concrete example was in P&C insurance, what is called explosive claims, where suddenly some claim tends to become very large in a very short amount of time, and they try to analyze it via the communication along the way if there are certain trigger words and certain patterns in the communication. And this is fully, let's say, autonomous AI, where it gives you a result. Of course, then an actuary looks at it and decides, does it make sense or not? But this was a concrete example, which was core actuarial work, but it was AI system within this client. Good. Coming to the next question, and Santiago, this one was directed to you as well. So Annex 3, defining high-risk AI systems directly refers to pricing of life and health insurance. In your opinion, does this regulation indirectly affect motor TPL pricing?
Honestly,
I think you touched on it.
Yeah, I mean, I don't know, to be honest. All these questions, I mean, we are looking into that. We have received similar questions during our conversations with the market, but to be honest, it's very, very difficult, because at the end of the day, this is a level 1 discussion. So it's about the definition of AI, what is in and what is out. And at this point, we do not have a response for that. So, but if I may say something else apart from that, it's when I think about the application of the AI Act and jointly with insurance sector legislation, what I believe is that in the end, I don't think that insurance entities will apply to different sets of standards. So in the end, it may not be that important whether you are in or out, because you will apply both regulations proportionally. I mean, proportionality is a principle that is embedded in both in the AI Act and in insurance sector legislation. So, but anyway, this is just my personal opinion. So, but in any case, I don't have an answer to that. Sorry.
Thank you. Any other reactions on this question from the esteemed speakers?
Yes, the same. Sorry, if I may, Jonas, it's the same. If you have no autonomy, if you have an algorithm that is self-learning from the telematics to see from a day to the other day how the driver is driving, does he respect all regulations and so on, and you can adapt the price or refuse to pay a claim with a total autonomy of the system between the data you have and the application of the data to answering to the question about paying a claim or fixing a premium, with no actuaries, with nothing between the model and what is said to the customers. So you are on the other side, you are on an IA system. But that's the way I'm looking at that. No autonomy implies you are an IA system. And after, you have to look carefully if it's high risk or not high risk for that.
Yeah. Thank you. Good. The next question. Thomas, I think this was guided into your direction from Andrew Collins. What is the purpose of the customer sentiment AI work?
I have not understood clearly the question about the end. So I have some call centers where we look at what is the feeling of the customer to help the guy from the call center to better interact with the customer. So it's something that we have already developed. We are also looking if we respect compliance from what the persons from the call center told to the customer. So in many issues, you can have an interpretation of the feeling of the customers and better react to the feelings that he may have on the phone. So it's something that already exists. And first point, and the second point is the customer, if you are able to process more quickly and answer to him or her, he or her will be very happy to be better served by the insurer.
Thank you. Very clear. So we've answered this as well. That's great. And there was one comment, Claudio, this was in your slots, which states from, I highly appreciate this sentence. There is no single key to unlock all doors. Claudio, maybe a short reaction from your side, which potentially even goes beyond XAI, I suppose, in this context.
Yes, definitely. So first of all, thank you for the comment, and definitely your comment is really captured the single concept that I wanted to convey for with these slides. That is basically explainable artificial intelligence is a large research field before being, you know, just methodologies and models applied from us, from users, you know. And the key point is that really you need to take in consideration the entire insurance value chain, because artificial intelligence models can be applied over the entire insurance value chain, as, for example, Thomas showed us, you know. And this means that you need not every time that you apply an explainable artificial intelligence, your aim is to build trustworthiness in the user, no? It might be that you are applying this model just to understand better the model if it is exposed to outliers or to bias, you know? So this means that the very first thing that you have to do, you should do when you want to implement a coherent and a solid explainable artificial intelligence approach, is to collect all the goals, the aims that you want to fix, and choose for each of them the correct model that you want, you know. So it might be that you want to leverage a model, XI methodologies or models, to make easier for a policyholder accessing your how the output that he received was computed. In this case, you will have to decide to choose a specific model. But it might be that you want to implement it just to verify the solidity of your models that you apply, you know. In this case, you would have to apply different models with different level of complexity, different way of transmitting the output of this model, or visualizing the output of these models. And not necessarily you need to apply models that are simplifying the output of your models or the models itself. It might be that some XI models will be even more complex than the model that you want to explain, because the users will be technical users, developers, coders, statisticians, actuaries, you know. And the key point is that obviously this would indirectly build trustworthiness in this model, but trustworthiness is not always the aim of an explainable artificial intelligence, you know. That's the point.
Thank you, Claudio. And maybe towards the audience, now is the last chance. If you have any burning question, please send it through. But in the meantime, a quick question to Thomas. Because we had the topic briefly, what do you see in your company, what the additional skills are that actuaries need to even develop further and, you know, take more space in the area of AI?
Yeah, clearly everyone now knows all the language, Python and so on, and the different matters about data science that is now learned in the different universities and school for actuaries. So for the young girls, they come to work with the skills. So after it's just to be able to closely work with the IT, and as we have actuaries, I think we have all the competencies for that. So you need to be in some way data scientist, but now I think in most of the places you learn that in schools, and you have to apply and do your actuarial job by analyzing what is the issue and transforming and build an algorithm, making all what you need when you are developing an algorithm, meaning as already analyzing an issue and testing and learning from the data and checking with all the right statistical tests and so on, if your model is right or not right, if it performs well or not well, with all the technicals that you have in data science, in the way you generate features, in the way you see if your model is right or not right, and so on, and then use it. So for me, from today, and with the new way the studies are done, the road is not so long for that.
Thank you, Thomas. And before I say a few closing remarks, Esko, you as master of ceremony, anything else before we come to the closing?
Maybe no time for any more questions, but I really enjoyed listening to. So thanks to the speakers on my behalf. I must say this was thoroughly very interesting. I'm only wondering whether or why just health and life are in high risk. Is there the possibility of pensions and non-life or general insurance being also in the high risk, and I would say at least advise people to be ready for that and not to be content with just doing the things in life and health, but be ready for the possibility of other areas being in the area. Thanks.
Great, thank you, Esko. And maybe let me add to that. So again, thanks a lot for all the participants. Thanks a lot for all the speakers for your engagement. And maybe 3 points I would like to give as a conclusion of this discussion. So first, I think we see that it's very important that supervisors and regulators are closely aligned and create clarity fast, because deadlines are approaching, and of course a pragmatic approach that aligns horizontal and vertical topics would be preferred. Secondly, please use the expertise and history of actuaries to really come to pragmatic and professional conclusions in this topic. And thirdly, I think this is very important. It's a huge opportunity for actuaries, and it's really down to every one of us to grasp this opportunity, and in the end, it will benefit the customer and all the companies. So thanks a lot for joining. Have a wonderful day and see you soon.